Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, joined by Calanthia Mei. She's the co-founder of Masa, as well as Anthony Georgiades, general partner of Innovating Capital and co-founder of Pastel Network, as well as Nihar Neelakanti. He's the co-founder and CEO of Ecosapiens, to discuss innovation in digital assets and Web3, as well as the regulatory and fundraising environments. It is great to have all of you with us, and I want to kick it off with the digital asset regulatory environment. Nihar, it seems to be that is really the focus on where digital assets are right now, looking for clarity, looking for the next path forward, particularly in the US.
Yeah, I mean, it's a topic that every crypto founder has to deal with, obviously. I think at the core of it, the majority of us are sitting here asking, what is the security, what's not? I mean, you hear Brian Armstrong, for example, going to Congress, asking for legislation to happen. The US as a whole has been behind the world, really, in bringing legislation to companies. I mean, we've seen, I think a few years ago, the US held 40% of crypto jobs, and it's actually gone down to 30%, right, over the last 5 years. I think it's an issue of American competitiveness in crypto. And the truth is, when I think about all my founder, friends or entrepreneurs we know in the space, a lot of them are sitting there saying, look, should I be starting my company here in the US or should I be going to Asia? And I think increasingly so, specifically if you're doing stuff in DeFi, we are seeing more people move to Asia. Next year, obviously, is going to be really interesting with the elections. There's several people on the Republican side that are pro Bitcoin. So I'm optimistic something will come to the forefront, but the US is still pretty behind there.
Yeah, I 100% agree. We just came back from Money 2020 and Token 2049. Token 2049 took place in Singapore, and then there's a lot of innovation in the Asia Pacific region as well as the Middle East. A lot of smart regulators are trying to provide more clarity when it comes to digital assets. We want to build here in the US, but we also would love to have more clarity from the US government.
Yeah.
I think one of the biggest things too is, you were touching on it, right? The lack of regulation, and regulation sometimes has a little bit of a misperception to it, but we want regulation, right? We want a clear-cut guideline and outlook and framework. And to your point, unfortunately, the US has been some sort of kind of strongholded to the extent of, we want to protect US investors, we want to protect institutions, but we can't necessarily establish the clear-cut framework, right? We have the IRS, FinCEN, CFTC, the SEC, state-by-state legislations, and there's this sort of disparity and dichotomy between how to actually instill that regulation. It's driven a lot of innovation offshore. It's driven a lot of potential onshore adoption from small businesses to institutions, whatever it might be, from having to effectively play the waiting game, and we've really fallen behind. I would say I am optimistic that for the first time over the last couple of months, we've started to see bipartisan support for actual framework and legislation to pass through. Most recently with the Proof Act, as well as a couple other bills that have been pushed forward. Whether or not that actually makes its way through Senate by the next election, I would be surprised, but it is good to see that there is some potential initial momentum happening right there.
Do you think if we get the approval for a spot Bitcoin ETF, that'll be a big hurdle, at least a catalyst to get the conversation going in a more constructive manner?
Well, I think when you have an asset like that in a certain instrument that is such easily accessible, and it's obviously cash settled, it's spot based, right? It's not a futures based instrument itself. That opens up the conversation and increases the urgency to actually establish that framework when you start to really have the amount of institutional adoption for those products that we're looking to see. Let's not forget too, in the US, data just recently came out, about 75% of crypto transactions are driven by institutions, among the largest in the world. The percent of institutions that transact in crypto as a percent of the overall activity in the space. So when you have institutional demand, it typically does lend itself towards a good solid framework that passes its way through relatively swiftly, but it's yet to be seen if that's going to happen this time around.
Yeah, it's interesting, and to your point earlier, Nihar, I believe the number 68% of blockchain/DeFi talent has migrated overseas for the reasons that you had said before, but really I think once we get over these regulatory hurdles, that's when you start to see innovation in this space. That's when you start to see the trajectory of institutional and more retail adoption, financial advisor adoption, as well as they look for alternative forms outside of the 60/40 portfolio. What are some areas of innovation that you think are really ripe in the DeFi space?
Yeah, I mean, the one that I've been watching, and I'm sure like everyone here has been hearing about, since it's awfully buzzy right now, is real-world assets. It's technically not, a new concept to crypto or DeFi or TradFi, whatever. But the core idea is taking off-chain assets, whether it's a physical property like a house, for example, lending assets, luxury goods even, bring them on-chain. I think that unlocks three sort of interesting applications for, DeFi. So the first one is creating liquidity for historically illiquid assets. These can be like luxury good items, for example, like a Birkin bag. It can also be climate assets, which, think like reforestation assets, soil regeneration, stuff that's part of the carbon credit, movement. Second is actually simplifying really large, complex transactions. So think housing, for example, car titles, things like that. We even actually heard earlier this year, California it's trying to move car titles to NFTs. I mean, we're talking 14 million car titles in the state of California. Just last year, we saw people buy housing, via NFTs too. So these are sort of like two big buckets that I see for real-world assets. A lot of people are sitting here saying this could be the big unlock for Web3 as a whole. I mean, when we talk about housing, luxury goods, physical assets, loans, things like that, we're talking trillions and trillions of dollars of assets, right? And so this could be a really exciting area for Web3 digital assets as a whole.
Yeah.
And speaking of trillion-dollar market, I recently read a report saying that this wave of AI revolution in the next 10 years will be able to generate $1 trillion in aggregate value. That is really amazing. And one big question all of us are asking us is, what kind of role will blockchain or Web3 or digital assets play in this new age of AI, right? Are we just completely obsolete, or will we play a key role in that? So here's my personal view in that. In order to power this wave of AI revolution, it requires a massive amount of verifiable, unconsented user data to power AI model training. Think about it. If we have AI agents who will create more personalized and delightful personal experiences and engagement with consumer, we need the data to support that. But in the current data paradigm governed by big tech companies, all of the user data are really locked in those closed silos or behind walled gardens. I think blockchain, especially using zero-knowledge encryption technology, has an opportunity for the first time to create a truly open and empowered and permissionless data marketplace where you or I, as a consumer, will be able to permission and contribute my data and get paid for AI companies using it.
Yeah, it's almost like we're renting our data from big tech right now.
Yes.
So, in terms of innovation in digital assets, where are you looking, Anthony?
Yeah, definitely. The thing that's interesting about it is we've come through a period where VC funding is nearing lows with respect to overall innovation and investment in the Web3 space. But on the flip side, coming out of the collapse of FTX and Terra and Luna and things like that, we're actually seeing a lot more sophisticated innovation in the areas that you guys mentioned. In DeFi, for example, one of the things that's plagued DeFi for so long is both the ability to borrow and the ability to take on large amounts of leverage for retail investors or potentially unsophisticated investors. And dealing with those types of instruments in a market that's nascent and extremely volatile obviously comes with risks that are very difficult to calculate. So there's a lot of innovation in DeFi right now to really mitigate a lot of those concerns. Something called smart contract looping or looping vaults is one area that we're looking at. Basically, better ways to calculate or predict potential volatility or inherent risk by putting on certain positions or gaining certain exposure, better optimizing for liquidations and things like that to minimize potential value at risk and losses for investors and retail individuals who are coming in to speculate on certain assets. So innovations like that are areas where we're really focused on right now that are really going to set the stage for the next 5, 10, 15 years of not necessarily just institutional, but mainstream adoption and activity on a day-to-day basis.
Well, it's a great point that you make. I mean, this isn't our first rodeo either. We went through this in the late 90s, and look, that was the internet. It totally changed everything from a professional and personal perspective, and there's a lot of folks in your arena that think this could potentially be the next wave. Web3 and the infrastructure associated with it can be the next iteration of that.
Mm-hmm. Yeah, I mean, there are some real use cases today, obviously, right? So like, I was just in, I mean, our office isn't so, and we were just talking about this earlier, but I just walked into a Ralph Lauren earlier this week, where they actually have QR codes on physical products these days, where if you go and you scan it, you actually get the full transparency of the supply chain, for example, authenticity of that physical product. I mean, if you think about how large the counterfeit market is, especially for large luxury items, these are unique ways, back to sort of the RWA stuff, real world asset, where consumers are actually protected possibly through digital assets, right? And so I think we're starting to see real mainstream applications coming out of this today.
Yeah, I mean, do you think we have the infrastructure within Web3 to support all these initiatives that the space is thinking about?
I think we have a lot of smart people who continue to build it despite the bear market. I mentioned zero knowledge encryption earlier, which is an area a lot of very smart developers have gone into, and that is closely associated with data, right? For example, right now, perhaps all of our browsing history is monetized by some big tech company. We do not own it, we have not consented to it, and we do not get paid when a search engine have built around our personal data. Using the blockchain technology, we're able to create that kind of data marketplace for the first time. That, to me, is really a game-changing view into what blockchain can do for the next decade or decades to come.
Yeah, I also think, Anthony, the interoperability between the blockchains is going to be key to this whole thing, because you can have as many blockchains as you want, you can have all these different applications, but if you can't interoperate among them, because as a consumer, as the end user, I really don't care how I get from A to Z. I want it to be seamless, I want it to be safe, I want my data protected, I want to be able to control it my own way. How it happens and how these blockchains are interoperable with each other, that's really what I care about, and I just want the user experience to be seamless.
Interoperability is one of those things where in Web2 and centralized systems, it's very easy to achieve. If I'm a high frequency hedge fund, for example, and I'm running a specific application or model, and I have data siloed in Amazon's cloud, and I'm running a specific type of model on Google's cloud, and everything's interacting, right? It's easy to achieve that in centralized systems. The world of Web3 is following similar footsteps to Web2 in the terms that it necessitates multiple types of blockchains that each have their own specific functionality and advantages. Application-specific blockchains, general purpose blockchains, whatever it might be. And the future of Web3 is how do you achieve interoperability and cross-chain asset swaps, where I can actually interact across all of these ecosystems in a seamless and frictionless way as I would in a Web2 system, doing that while preserving all the fundamentals of decentralization and zero knowledge, trustless systems, completely distributed, is one of the biggest hurdles right now that I think is the most exciting to watch in terms of innovation progressing, and one area that we're focusing a lot of investment on.
Yeah, and you also brought up an interesting point, decentralized identifiers. Why is that going to be key to the infrastructure of Web3?
Decentralized identifiers. We mean identification, right?
Right. How are we going to be able to ensure, because the thing is, it's interesting, the ethos when you think about decentralization, right? But then you also have public exchanges, public cryptocurrency exchanges where there is a KYC process. So it's almost like, what the ethos is, it's decentralization, we want to control, our data and so forth, but what about being able to verify identity? And I mean, KYC needs to be in place. I feel like there has to be a balance struck there.
Oh, I've got like two thoughts on this. One is that, so interestingly enough, I'm sure all of us here have LinkedIn's. Did you know that 50% or about 50% of people actually lie on their LinkedIn profiles about where they went to school, what they studied? It's a well-known, it's
Wow.
close to 50%.
That is pretty high, considering if you get a job via LinkedIn, I mean, do people understand at the most basic level that there's going to be verification done there?
Now imagine if you were issued an NFT the moment you graduated with your GPA on there, the classes that you took, and then you got your first, the first job you had underwritten to that same NFT, and that same thing became part of your track record, right? That starts to become like the ultimate source of truth, something that can't be taken away from you, can't be manipulated, can't be changed, obviously. And that, if you think about that process, we're basically creating like a unified key and a source of truth that you can access a number of different applications with. I mean, it's, hey, I'm gonna now use my key card or my NFT to give Facebook some of my data, right? Or here's how I want to interact with X, for example, right? And I think having that unified, it's trustless but also trustful in a way. NFT, it can be really powerful. I think the other thing about infrastructure that really needs to change is like the cost of gas, right? Which is like, that's a big unlock that needs to happen for all kinds of applications in the Web3 space. I mean, if you think about like the transparency of healthcare data, for example, or supply chain and logistics, a lot of these things are transacting at very high cost today. I mean, if you look at AWS, or if you compare Ethereum to AWS today, it's about 32 times as expensive to underwrite, software or data to Ethereum compared to AWS. Just 2 years ago, it was 135 million. Today, with layer 2s, it's coming down to 9x, right? And so I think as we approach this sort of parity in gas fees to AWS, you'll start to see a lot of new applications really grow.
Yeah, I mean, and it seems to be that the industry is doing a good job with being able to bring those gas fees down, because that's really what it comes down to. And it's like anything else. If you look at TradFi, look at all the online brokers that came on in the late 90s. I mean, you could transact for virtually nothing. Even if you look at ETFs and mutual funds, the cost to own one of those, the management fees are super low. And I think what happens is the Web3 space becomes more accessible and more democratized. You're going to see costs continue to come down. It's the model of scale, if you will, right?
Yeah.
I mean, the costs will certainly come down over time as they have. I don't necessarily think or believe that fundamentally costs will ever be competitive to centralized systems. There's always going to be a trade-off, but that trade-off is they're far more accessible, right? There's a lot less barrier to entry in terms of being able to go, and you talked about brokerage accounts. Brokerage accounts in crypto are open 24/7, 365, whereas in Web 2, you're very limited in terms of what you can transact and when you can transact it. Being able to operate and transact in a Web3 world opens up a tremendous amount of opportunities for anyone around the world, which is exciting. So with everything, whether it's cost, whether it's how much data can be stored per block, there's always going to be certain trade-offs, and I think that there's a world where both live and have certain purposes and functionalities side by side, and we see a tremendous amount of inflow of overall transaction volume and activity in the Web3 ecosystem. And a lot of it has to do with those benefits that I mentioned.
Right, and Calanthia, with that scale and accessibility, that's when you start to, remove some of those headwinds from adoption.
Exactly, and I think you made a great point about the global aspect of the innovation, right? Right here, we're sitting in New York, close to Times Square. Maybe we don't think about the difficulty of owning a digital passport in the format of NFT or opening up a brokerage account, because for us, it's quite easy. Internet is readily available here. Everyone has basic knowledge when it comes to those kind of stuff. But for a lot of part of the world, there needs to be a better infrastructure to serve people when it comes to access to financial freedom or even basic right and ownership of digital ID. Web3 does that. In our own community, in the past 14 months or so, we have around 750,000 users, and most of them are completely global. They're from Southeast Asia, they're from Nigeria, they're from Europe, etc. So I think the power of Web3 at the global scale is really insane.
Yeah, and that's an awesome point that you make, because we tend to think so US-centric here, when we have to realize that we have legacy infrastructure, whether it's central banks, whether it's the inner workings of traditional finance already in place, areas of the world. To your point, Southeast Asia, I mean, look at everything's happening in Singapore these days, right? Africa, South America, that's where you're seeing all that growth, because they're able to basically leapfrog over us where we have this existing infrastructure. So in many ways, local economies are being grown that way. They're already transacting business their way. There's already capital formation happening there. And we always talk about the global economy becoming more digitized. The way capital is formed, we used to be the hub, US capital markets. We were, that's why we have to get regulation up to speed and be competitive with our other counterparts, because we don't want to not be able to build from the ground up when it comes to capital formation in the digital economy. Anyone have any thoughts on that?
+1.
Yeah, I mean, I feel like that's really what it is, and let's wrap up on that thought there. When we think about adoption trends, I think, Nihar, that really we're going to have to really catch up with our counterparts, because the way capital is being formed, the way businesses is being transacted, it's happening. It's already taking place.
Yeah, I mean, the story that a lot of people are forgetting about, at least with NFTs, is that enterprise has actually been doubling down in the area. I mean, a few years ago, we saw a few large companies tiptoe into this space, right? Nike, for example, with the metaverse, UNICEF even. But today, you're actually seeing companies like Lufthansa. I mean, who would have thought a large German airline would say, we're going to start making a rewards program made out of NFTs, right? We've been tracking, at least 85 plus companies that have since entered the space over the last few years. This is despite the fact that consumer confidence, generally speaking, has dwindled in NFTs, right? And volumes have come down about 3x since the peak. But I think this is the time where lots of companies, governments are actually quietly working behind the scenes, because we see the promise in the fundamentals of the technology, right? Like, you can reimagine e-commerce, you can reimagine payments, transfers. We were talking about real world assets, right, using this technology. And so I think seeing enterprise really come in and build applications here is what makes me super excited.
Right, and Anthony, of course, it's consumer facing. That's when it starts to make sense.
Exactly, exactly. I mean, I think one of the areas too where there needs to be, and there has been, a tremendous amount of focus has been certain points of infrastructure that make it a lot more accessible for anybody on a consumer-facing application to go in, and it actually ties back to regulation, right? You can't necessarily have an application on your iPhone that starts to interact with crypto and Web3 unless there's some clear-cut regulation in terms of how that data is going to be transmitted, how that crypto is going to be taxed, and things like that. So a lot of things need to start coming together, and I think we're starting to see that happen before things really take off. And we'll know that we've won, and effectively we've reached that end goal when we're not even referring to NFTs anymore, but as NFTs, it's just the underlying protocol or technological standard that's powering how we operate on a day-to-day basis.
All right, Calanthia, last 30 seconds to you.
All right, one comment on consumer, one comment on enterprise. On the consumer side, I 100% agree with you. With the invent of account abstraction, you don't have to be an owner of a crypto wallet in order to participate in a Web3 world. You can use your social login, you can use your typical browser to be part of the Web3 community. I think that's impressive and very encouraging for the adoption. On the enterprise side, 100%, I think a lot of large enterprises across the globe are quietly behind the scenes building pilots and about to announce that in the next few years. Can't wait.
All right, appreciate the insight, Calanthia, Anthony, and Nihar. Thanks for joining us on Trade Talks, and I'll see you in Singapore, speaking of Southeast Asia, for the Singapore FinTech Festival, November 15th through the 17th. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.